Hey everybody, Cowboy here. We got a quick clip, well, maybe not so quick, but a decently quick clip about backtesting. And if you stick around after the video, there is more information about how to find us, what we do. You can also see our website at the bottom of the screen or zap that QR code to take you over to our website. Thanks for watching. We're going to take a look at backtesting, and I'm just going to make a simple BS algo here. It's not necessarily going to be a good one. I think I've done this before, so we're not necessarily giving anything away for free. But look, the way MACD can work, it works in a few different ways, right? So MACD is gonna I'm gonna keep the standard default settings, right? I use different settings on my MACD, and those of you in Algo Factory know what they are. Okay, so but here we're gonna go ahead, and I'm gonna actually just let you know that when we build an algo, we stack indicators. Okay, so we're going to stack MACD and stochastic RSI, and we're going to analyze both of these to kind of see how they work, and then we're going to see if we can kind of make a strategy to where we can predict price movements and win trades. And then we will go back and do some back tests. That's what we're going to do. So MACD, one way that it works is that when when this line, okay, these two lines, the squiggly one's called the MACD line. It's a moving average that's faster, for those of you who understand what that means. And you don't need to know what that means right now, but if you can just visualize what I'm talking about without the math behind it, you'll get what we're going with this. The slower one, the smoother one, is orange. That is the signal line. Okay, so one way to do this is that when the signal line goes below this zero line, okay, so these green and red, it's called a histogram. When the signal line goes below the histogram zero line. So if you look to the right, you see it where it says zeros. That's because as I move the cursor up and down, it goes from positive to negative. So when this signal line goes below the zero line, price tends to be negative, like the direction of price tends to be bearish. When the signal line goes above the zero line, price action tends to be bullish. So now you're going to have these weird areas right here where it kind of crosses and there's not a lot going on, right? That's where you can lose trades, and you're always going to lose trades. And this is a very simple algorithm. We're not going to try to develop any kind of filters to avoid that problem. We're just going to strictly stay with this above below because we don't have time for the rest of it. So there are ways that you can use more indicators or other types of analysis to actually filter that out, to filter out those bad trades. We're not going to do that here. I'm just going to mark where the crosses are, and we're going to do some comparisons. Okay, so I'm just going to make these lines, and they'll go throughout the whole chart, right? Okay, and a great area to look at is from here to here because it's below this whole time, right? Same with right here. The signal line goes below the zero line this whole time. So in this whole time, price is probably going to be bearish. Okay. So now I'm going to go ahead and close that out. And then I'm going to identify, based on this line, what's bearish and bullish, right? So here you can see where after this line, the signal line goes below. Let's go ahead and label it. Yeah, we'll label it up here. We'll say bearish. That means price is probably going down. And the same is going to be over here. Let's see here. And there's a blip right here. It's going to be like bearish right there, but you don't know it until it happens. So, we're looking at things as they unfold, right? Looking at things in real time. So we're going to do that here. Little bear, because you don't know it's going to turn back up until it happens. We're looking at the past, right? For those of you who have backtested, you know what I mean by this. Okay, we'll do that. Okay, and then we'll do right now everything is bearish. Okay, we'll make that bigger since it'll fit easier to see. And everywhere else is bullish. So we'll do bullish. Okay, in this area. This is going to be quick and dirty. Bull. Bull. Okay, so what we're doing is we're using the MACD crosses to just identify some areas where price is going to be generally bearish or bullish by definition of the signal line going above the zero line, okay? And this is a beginner class, so I'm being a little painstaking about the explanation. So in this area that's bearish, now what we're going to do is we're going to look at a stochastic RSI. I'm going to blow it up. We're going to look only at the stochastic RSI, okay? Now where price flips over like this, and remember I'm using the standard settings here. I have my own settings. People in Algo Factory know what they are, but I'm going to code teal where price crosses each time, okay? So let's code it teal. And we'll code each cross up or down where the red line crosses the blue. And it's a similar thing. These are, I'm not sure that this is a moving average per se, but it may function kind of like one. And this is a nasty little guy right here. This is a double flip. We'll have to kind of deal with that as we go. And that's the same kind of situation where you get these sort of readings that are a little messy in that area way up high. And there's a way to treat that, but we're not going to get too far into detail on that right now. Okay, we're just going to get real simple on this. Because I want to construct a backtest. I'm not trying to construct a successful algorithm. I just want you guys and gals all to see what a backtest looks like, okay? And then what I would do is I would find a way to filter out the junk, right? That's what I would do. Filter out the junk. So this is very simplistic. This is going to be, I'm going to code this a different color because it's a double flip right there. It's both MACD and stochastic. Okay, so let's delete that one. Okay, let's keep going. So I'm just going back through time and mapping out all these different kind of areas, right? All right, so you notice there's a lot of stochastic flips, but we're only going to pay attention to the ones that flip in the direction that MACD is dealing with, right? So, for example, in a bull area, well, where do we start? We start in a bearish area. So I'm going to make these a little thicker to make this easier to kind of see, okay? Dash line and really thick. Okay. And then this same thing here, dash line and super thick. Okay, so in between these thicker dash lines, we have bearish price action, right? We got the big bear that I put right here. And every single one of these flips, we're going to filter out the flips where it went long. For example, I actually didn't code one of these, but this is a short flip. That's a short flip. That's a long flip I didn't code. That's a short flip. That's a short flip. I'm going to filter out this long flip where the stochastic has flipped to where price wants to go up, for example. So where this flip happens right here, where stochastic blue flips above the orange, that's a bullish flip in stochastic, and we want nothing to do with that in a bearish situation, right? So, and we know this whole area here is all bearish. So like this bullish flip, we don't want anything to do with. This is a bullish flip we'll cut out. So now we've narrowed down the field. Oops, let me do this. So we'll only right now pay attention between these two dotted lines. So what we've done is we've gone through the past, okay? And we're going to backtest, and the best way to do it, well, I'll show you at the end of this an even better way to kind of make this easier. But in this backtest, each one of these blue flips is potentially a trade, okay? So let's just say that you want to go short, and if you watched the show yesterday, then you'll see how stop losses are created and how this long short box works. Okay, so we'll stretch this out a little bit, and this is a short cross on the MACD in a bearish situation, so we will go short. And we're just going to pretend we have a good stop loss, right? Like we're not going to go deep into that. We're not going to spend a lot of time on it, but that's a winning trade. Okay, definitely. This one here looks like a winner, right? Now this backtesting says, man, this is really easy. I could just do this and win. Well, maybe. I mean, I think that because of my knowledge of things, this is going to look easier than it really is. But in the reality, it's not that much harder than what I'm doing. Really, it's not. So that's 3 successful trades already, right? So we got a short here, and look, you could test and get like 6 successful trades in a row, right, on your testing, or like you could get like maybe 6 out of 8 or 6 out of 7, and man, this algo is dank, man, it's gonna do great. And then like you find out later, as you're trading in reality, that it's not the case, right? So you got to be real careful with backtesting, but I'm just showing you how backtesting is done. So as I'm pulling these little trades out, right, there's going to be some rules that you have to apply that I'm not even talking about here. Like, so, understand that there's a good chance that you're not going to win as many of these, as you could. In fact, right now you've got 3 winners, but then you notice these all start to look like losers, So you're only about a 50% win rate here. But if you look at the size of these trades, if you're advanced enough to understand how these long short boxes work, you'll notice that the actual the wins are much bigger than the losses. So even winning half of these, you got 3 winners, 1, 2, 3 losers, probably 4 losers, maybe 3.5 losers. So maybe even 4 losers, but these winners potentially are like 3-to-1 ratio. So you're losing $100 when you lose, but you're winning $300 when you win, and that's profitability, right? So going through this like that, that's a backtest. You just watched a little tiny, very simple, probably not successful backtest, but it looks good. That's how it's done. All right. So I wanted to just kind of run through that really quick for, those who are interested in Algo Factory. This is the kind of testing that we do. And in this case, we could, tally up the numbers. We can say, just real simple here. You can tally up the numbers, just see what that looks like. So we'll say, let me see, test 1, win 300, test 2, win 280, test 3, win 320, test 4, lose 100, love 100, lose 100. And we're going to say that for 4, 5, 6, and 7. We'll just say those are all losers because this isn't a really good back test because, it wasn't meant to be. And yet it's still profitable because you have won 903 trades and you lost 404 trades, because what you're doing, for those of you who have gone through, like, you can go back through our clips. There's entire discussions around in our clipped version of our YouTube talking about risk to reward ratio and why I'm winning 300 on the winners and losing 100 on the losers. But technically this is profitable. In this case, given that the trades went like this, given that, I was able to have that good risk reward ratio, and that's a big given because this is just a sloppy little back test thrown together that really doesn't have a lot of metrics, but that you've won 500. You've lost more than half your trades, but you made $400 or $500. So, take it for what it's worth. I mean, this is a plausible back test. I know that I could make this work by using some other metrics. I could use filters to filter out the bad trades. One trick here would be only to stick with the MACD while the, I'm going to show you this real quick here. Only stick with the MACD while the histogram is red, because once it pops green, you notice you start losing trades. So if I were to, let me just do a quick coding here. This red, I'm going to code this one red as a loser. Red as a loser. Red as a loser. And we're gonna zoom in after I do this. So I know that the screen looks messy right now, but I'm just coding the losers right now so that once we zoom in, we'll be able to identify them. Okay, so I'm going to zoom into MACD and demonstrate to you a very simple filter, which makes this algo a lot more feasible, even in this sloppy little BS backtest. Look at where the losers are, all the red. Remember, all these are short trades, right? Your signal line is below the histogram 0. So when the histogram, even though the signal line is way below here, you'll notice that the histogram is green. In other words, the MACD is crossed above the signal line. But the easy way to look at it, it doesn't matter which way you do, when you notice that this histogram is green and or, well, it's going to be an and, the MACD is above signal, you notice those are all loser trades. So when the MACD crosses below, I'm only taking bearish trades. And when it's below and histogram is red, and which is the same thing by definition as the MACD line being below the signal, those are all winner trades. So that's actually a super feasible, extremely simple algorithm that probably works. So that was a quick backtest. That was a quick algo build for everybody to see. So we are live every weekday, 8:30 AM EST, giving out free content. Come check us out on YouTube. Come talk to us. Go over to the website. That's www.algofactory.tech. Again, www.algofactory.tech. And for a limited time promotional offer, we are giving out memberships at $49.99 a month. There's a ton that we're offering over there. Come see what that's about. Also, you can see our Twitter link. All the links are up on YouTube. Come talk to us on social media. See us on the live YouTube videos. We hope to see you soon.